Hello traders, Carlo here from Blueberry with the week ahead. Let's run through some of the key releases this week and what is likely to be top of mind for traders. 3 key events stand out: Japanese election, US non-farm payrolls data, and the US CPI. Now these last 2 data points are out this week given the partial US government shutdown last week. They were delayed until this week. Some of the products that should be top of mind for traders this week: gold, silver, and Bitcoin. They continue to attract strong interest thanks to their elevated volatility so far in 2026. Also on traders' watch list, most likely to be dollar yen and the Nikkei after the LDP coalition's landslide victory this morning. US equity indices, which recovered late Friday, especially with the Dow Jones printing above 50,000 and making headlines globally. Let's take a look at the charts. I've got the Japan 225 daily in front of me. Over the weekend, Japan's ruling coalition government, led by Prime Minister Takaichi, won a decisive victory, giving her and her party a strong mandate to pursue further fiscal stimulus, which you would expect to help Japanese equities. Now we have seen a gap higher in the Nikkei 225 this morning, shot up to almost 59,000. It's come back a little bit, perhaps trying to retrace that gap. But you can see here for traders of the Japan 225, it's been in a strong uptrend for the majority of 2026. The 20-day EMA coming in around about 54,000 would be first line of support. Going forward, prices have generally hugged that over the course of 2026. The next chart is the dollar yen daily chart. Now, given the landslide election victory by the LDP coalition over the weekend, one may expect the yen to continue to weaken as it has done so during the election campaign. Prime Minister Takaichi did mention and talk up the benefits of a weaker yen for the export sector. And for traders of dollar yen, as dollar yen approaches 160, intervention rhetoric from the Ministry of Finance may increase, although if you recall 2 weeks ago, US Treasury Secretary Scott Bessent did indicate that the United States is unlikely to assist Japan and coordinate any intervention. So levels to keep in mind here, a dollar yen does look quite strong on the technicals, but 159 figure 20 region is a key level of resistance. We do get to push above there. 160 remains as psychological resistance. So we do need more than just yen weakness. We need some kind of sustained US dollar strength for dollar yen to push above 160. On the downside, support level I have here around about 156.20, which is the yellow line, the 20-day exponential moving average. Gold continues to be on traders' radar. There's been many factors impacting gold throughout 2026, and rate cut expectations continues to be one of the key determinants. In the US this week, attention turns to the delayed US non-farm payrolls data and US CPI. Non-farm payrolls are forecast to increase by 70,000 jobs compared to an increase of 50,000 in December. CPI expected to come out plus 0.3 month on month. Current market pricing is roughly 2 25 basis point cuts by the Fed throughout 2026. Any changes to this pricing will most likely impact short-term direction of gold. On the technicals, you can see gold price has pulled back to the 50-day EMA here in blue, held and bounced off quite strongly. So this is quite likely to be a continued support going forward. And finally, equity market indices remain popular with traders. Now this week, on the earnings front, several major companies report: McDonald's, Coca-Cola, and Cisco Systems, and the AI bellwether stock Nvidia reports on the 25th of February. The NASDAQ 100 in front of me here remains quite sensitive to interest rate movements and expectations of, and we'll get 2 data points this week that will likely impact further expectations of Fed rate cuts throughout 2026. Technically, you can see that the NASDAQ 100 has been trading quite wildly between 24,000 since early October to 26,200, presenting opportunities for short-term traders. So that's the week ahead. Thanks for watching. Good luck in your trading, and I'll see you in the next video.